Hi, this is Alan Mandel at HTDT Gold at 75 Wall Street in New York. This is November 13th, 2013, Wednesday. And this is my gold journal report for this week. Now, gold and silver slid over the past few weeks, and the blame has been dollar strength and increased speculation that the Federal Reserve will withdraw its monetary stimulus, that it will cut back on its $85 billion a month bond buying program. But that's not the entire story. Although recent economic data has showed strength, there was a strong jobs report, and housing seems to be recovering, at least temporarily, there are other factors that are influencing the markets and that will contribute to a rise in gold and silver maybe a little later on than I thought. One aspect is that foreign countries are diversifying out of dollar-denominated assets. As reported by Reuters this week, South Africa is diversifying out of dollars in their foreign reserve holdings and into currencies like the South Korean won and the New Zealand and the Australian dollar. This is happening worldwide as the debt for the United States looks like it's going to surpass $17 trillion. And as foreign countries dump U.S. bond holdings. U.S. Treasuries fell by $128 billion over the 5 consecutive months through August. Asian countries shed more than $70 billion of U.S. government bonds year to date. South Africa let some go too. So these are contradictory indicators. On the one hand, the economy looks strength if you look at the jobs report, and on the other hand, foreign governments are losing confidence. Now, there are other things happening domestically that warrant some due consideration, and that is the increasing bankruptcies that are taking place in cities around the country. We, of course, all know about Detroit. But now, Desert Hot Springs, California, is the third city out there to declare bankruptcy, and they're citing inflation as the cause. Pension costs are rising, salaries are rising, and costs to run city government are all going up. This is endemic for the rest of the economy in the rest of the country also. Costs are going up, and my prediction for higher inflation domestically seems to be coming true, although it won't show up into the numbers until sometime in the first or second quarter in 2014. Packaging is shrinking, like cereal used to be in 1-pound boxes, now it's in 14-ounce boxes, and the prices are going up. So you have medical costs, education costs, the pension costs in cities and towns around the country, the ability to run city services are all increasing, and this will trickle down. Also, we have a potential housing bubble forming in the market. Prices are rising, but at the low end of the housing market, prices are falling. Also, in consumer sentiment, we see people on the high end of the income spectrum gaining confidence, while people at the lower end are losing confidence. Once the stock market starts to fall apart, confidence across the spectrum will decline, and that could add pressure under gold and silver because the dollar will go down and the economy could go into turmoil when the Fed starts tapering. They can't go on forever. They just can't. And banks are going to be losing confidence, and so will the American public. So I'd hang in there and use the opportunity of lower prices to buy on weakness. Silver under $21 an ounce and gold under $1,300 represent terrific opportunities in my opinion. Thank you, it's Alan Mandel, and I'll be back next week.